the best case would be for Putin to surrender and for oil and gas prices to go down and interest rates to fall everywhere, but that ain't going to happen. There isn't really a best case, and all that one can hope is that nothing causes yet further instability.
3 days left to get this done. So said the Bank of England Governor Andrew Bailey last night. Now, normally the sober financier, the warning had an immediate effect on the pound, which fell within minutes. Is the 3-day warning as ominous as it sounds? Let's speak to Charles Goodhart, former member of the Bank of England's Monetary Policy Committee and Emeritus Professor at London School of Economics. Good morning to you.
Good morning.
The big date then, October the 14th, that's what he was referring to. Was Andrew Bailey right to remind pension funds very publicly that they only have 3 days left?
I think that he's right to try to get them to move as quickly as possible. But whether he can realistically promise to stay out of a very shaky gilts market is very unsure. And indeed, just as Andrew was speaking, there were reports that unnamed officials in the Bank of England were actually suggesting that indeed, if things did get difficult in the gilts market, the Bank of England would still be prepared to go in there.
What are the best and worst case scenarios for what might happen between October the 14th and October the 31st, when we're going to get that statement from the Chancellor, if the Bank of England did not continue to intervene?
One can't tell exactly. The best case would be for Putin to surrender and for oil and gas prices to go down and interest rates to fall everywhere, but that ain't going to happen. There isn't really a best case, and all that one can hope is that nothing causes yet further instability.
But Charles, what is it that's causing the current instability? I thought that was to do with the fallout from the mini budget and with, people who are bond vigilantes, people who are kind of playing the market, people losing faith in the UK. What is causing the current instability?
Well, you've still got a very large deficit that has to be financed. So you've still got very large gilt sales that have to be made. And given the uncertainty and instability in the system, there are at the moment not that many keen buyers. More sellers and fewer buyers make for instability.
So how can we make the buyers more keen or make more keen buyers?
It's going to be very difficult because the government would be very averse to reversing its unfortunate mini budget. On the other hand, if you're going to stabilize the longer term prospect for repayment of debt, you then somehow have to cut spending. And the idea that you can cut spending easily without great pain is also extremely difficult. And it just has to be said they went down the wrong road.
Did they go down the wrong road ideologically with tax cuts, or did they go down the wrong road because there was no accompanying financial reports?
Both is the answer. And one of the reasons why the market got so upset was that the refusal to allow an independent assessment of the longer term prospects for public sector debt by the Office for Budget Responsibility was cancelled when it could have been done. And that effectively implied to virtually everybody that the government had no idea of how it was going to finance this debt. Just somehow believed that it was miraculously going to bring about a surge in growth, whereas actually the instability that has been generated and the higher interest rates is going to make the deficit and the debt worse by a lot, not better.
You say that those reports could have been done. I mean, Kwasi Kwarteng categorically said they just couldn't be done in time. Those reports couldn't be produced in time, and that's why we didn't have them.
Well, the OBR is reported as having said that it could have produced them. That's all I know.
What about the Bank of England's role in all of this? I mean, obviously, I understand you're a former member of the Bank of England's Monetary Policy Committee. You're watching things from the outside now. You said at the beginning you thought that Andrew Bailey was right to remind pension funds that they only have 3 days left. The problem, though, is that it's a confused message because 3 days left sounds definitive, doesn't it? It sounds like gets to Friday, that's your lot. And as you said yourself, we have these reports from this morning circulating that actually that might not be true, that the Bank of England might stick around in any case. That kind of confusion is not helping an already confused situation. Is that fair to say?
Yes.
So what is the Bank of England doing, do you think? Why are they saying one thing when they actually might mean something else?
I really don't know. I don't know the answer to that one. And you should never say never in either central banking or politics. You always got to leave yourself a loophole. Things can always get worse.
Yes. Well, on that, we'll leave it. Charles, thank you. That is Charles Goodhart, former member of the Bank of England's Monetary Policy Committee and emeritus professor at London School of Economics. Things cannot always get worse, but let's hope they get better. That's all I can say.